HIMS and HARS. This is a stock that I normally call the gift that keeps on giving. The stock just moved 90% in the last month on very huge volume. This stock has been giving us a lot of opportunities in this year, so I'm very grateful to this stock. Now, whether you're a beginner and you don't know anything about the stock market or a seasoned professional, I'm going to show you some very easy principles that we can use to analyze the stock. We're going to see, is it a good buy right now? Is it a good time to short it because it's overextended? What does the technical analysis say for swing traders? And what does the fundamental analysis say for investors? Now, the first thing that we have to do is to look at the earnings. So here I have a small table that I just used to eyeball earnings. We can see that this company is growing like crazy. It is making a lot of profit, and that's why it has been going up. If you look at the earnings per share, they have been accelerating. So it goes from 60, 100%, then 200%. Anything above 50% in the last 2 quarters or 30% in the last 4 quarters, that is amazing. But this company has been doing 200%. The revenue is also growing. If you see revenue of 20% over the last 2 quarters or 15% over the last 4 quarters, that is amazing. But this company is doing about 45, 50%. That's why it's been going great. So after that, the earnings are tick. Then we go to the industry. Is the industry in which the stock is going up? We type in HIMS. We can see that the industry is like sitting there. It looks like it could go up or it could go down. Currently, I'm a bit skeptical, so just wait and see. The industry is not looking that great. But this stock, since it is too strong, it does not care about the industry. We've seen that earnings are good, industry is not good. So now we want to see if we should buy it. Is it time to short it? And that's when we go into the price action. So when you look into price action, you always want to look at the big chart first. So we put a weekly chart here, and then we put a monthly chart here for 4 weeks. Okay, what does it say? Monthly chart is looking good. The up weeks have huge volume, and the down red bars don't have huge volume. The weekly chart is also looking the same. So for long-term investors, you can see that the stock is having very huge volume as it goes up. That is a good sign. But the problem is that while it's going up, the volume keeps reducing. As you can see, this bar has high volume. The volume keeps reducing while it goes up. And this particular bar, once it has a red bar, the volume is becoming very huge. And this is a very telling sign in the stock market. Going up on low volume and one huge red bar. This is not a good sign. And it is starting to tell me that, hey, maybe let us not buy this thing. I always like to look at my charts in a 1-to-4 ratio. So here I put a 4-day chart. Here I put a daily chart. So this was something called an earnings play. And if you want to learn more about this particular play, there's a video on this channel, a very detailed video. It will teach you everything. I highly recommend it. These videos that I show here are more like examples, but there I go through the whole philosophy. That being said, if you like this free content and you like this video, please subscribe to the channel and also like the video so that it can help the algorithm boost the video, and sign up for my free newsletter where I'll be sharing tips of the stock market and also stocks that are ready to set up. So here on this particular stock, we can see that earnings were great and it gapped up. But then on that day of the earnings, it actually crashed. 3 days later or 4 days later, it recovered and crosses above the opening or the high of the earnings. This is a very good sign. And this is a normally sneaky tactic that happens in the stock market. The company will have good earnings, drop, and then recover a few days later. And that is when I bought, right here. You can just buy right here. You know, the risk is the 1.5 times the average true range. You can get this 1.2, this value here is 1.5 times the average true range of the last 14 days. Put 1.2. Now, since it has consolidated for a long time, I would say that here we can expect 5 to 7 times the average true range. So the first goal was here about $20. So it reached that goal. It looked like it corrected, but the reason why I didn't sell it is because the corrections had lower volume than the up days, right? If these corrections had very high volume, I would have sold, but it didn't have high volume. So I didn't sell. The next goal is normally 7 times, which is here. And it just seems to have just gone through that goal. And it went up about 90%. So after earnings, If a stock moves up like this, normally a good selling signal is to sell it after it closes under the 10-day moving average. So we have our moving averages here. The stock goes up, and once it closed here on high volume, I knew that something was wrong, because let's look deep into the volume on those days. In the stock market, the signs are always there. So it comes up, and then on this day, doesn't go down in volume. And then this is an indecisive candle. We can see it doesn't go up or down. The traders don't know where the stock is going. But there's very high volume, but the stock doesn't go up. That's a bad sign when the market is at the top. Then it tries to go up and then fails to go above the high of that candle. That is the first bad sign. Then the second sign is that we see a huge red day, 10% drop, which is the biggest red day, I think. Yeah, it's the biggest red day in this whole uptrend. 10% drop on very huge volume. And that volume is greater than these candles here. That means that a lot of people are selling this stock, and it has found some huge resistance. So as swing traders, this is not a time to be in this stock. It is starting to correct. As long-term traders, if this stock corrects, you can buy it again, maybe near the 50-day moving average. But for swing traders, who this channel is dedicated to, this is not a time to be in. Is it a time to short the stock? I wouldn't also short it as well, because it is not a good candidate to short. There are three positions. You can either buy, you can short, or you can also have no position. And in this particular stock, if you've been holding as a swing trader, it's a time to get out temporarily. What I think is going to happen is that it might just come up here to $24 again, and then it's going to crash some more. So I think it's just going to do something like this. But let's wait and see what is going to happen. Because we saw this move again here. It had some good earnings, then it gapped up. Some kind of percentage move. Let's see what it did. It also did the same thing, almost above 90%, right? Gapped up, and once it closed below the 10-day moving average, it was time to sell. And we can see how much did it correct. Around 33%. Okay. So if it corrects 33% here, where is it likely to go? About here, back to its high. So it's likely to come sit down for a while and then go up again. So if you like this video, like the video, subscribe to the channel. There's going to be more videos like this, and I can't wait to show them to you. Thank you.